Party. Stock of the day, well, it's got everyone talking. Confession season has well and truly kicked off today ahead of those half-yearly reports, which will be coming out in February. Appen came out today and said Google is going to terminate its services, with all projects with Appen suspended by March 19. Now, Appen had no prior knowledge. Google accounts for nearly a third of its revenue, or $82.5 million in 2023. Appen says it will adjust its strategic priorities on the news and provide further details as its results are released on February 27. Daniel Ortiz, this is a hell of an announcement. Your biggest customer announce a third of your revenue, says, okay, we're going to pull the plug. Now, we should explain, Appen has been always categorised as AI, but it's quite an old-fashioned labour-intensive business, isn't it? It's not a flash technology company.
Yeah, I think you hit the nail on the head there, Koshi, and that's what the market does. It has narratives on stocks and businesses, and oftentimes it gets ahead of itself, and then quickly things can unwind. So, we saw Appen already fall 90% from highs of 40 odd bucks, to $4 to $3, and it's fallen 90% again since. So that's the danger when you're investing in the share market. I guess you have to really understand the business. A falling share price and perhaps a cheap valuation on either a consensus price target or perhaps a PE ratio, those aren't suitable measures to make long-term investments. And Appen is the perfect case study. The reason why you have to genuinely understand the operations of the business, you have to understand its outlook. And if you did that, then you would have been out of this company, a while ago. So, we were in Appen quite early back in, I think, mid 2010s, and we rode it all the way up and then sold it out at about mid $20 and still lost 50% from the peak. But considering now where the share price is at, clearly in hindsight, that's been the right thing to do. So, in my view, yes, fundamentally we can talk about the update. A lot of things wrong with the company, but it goes back to that old adage that Peter Lynch saying, where you never want to trim the flowers to water the weeds. You want to be able to maintain a high quality portfolio, and clearly Appen is a perfect case study as to why that is.
Because was it the market or investor didn't understand it? Because everyone talks about AI. But Appen's business model is it hires tens of thousands of people, does it? To basically not photograph, but sort of embed images so that AI can recognize them. Is that basically the understanding of what the business does?
Yeah, it's effectively a data training or a data set building and training providing company. So, if you've ever actually looked at the business yourself, you can actually go online and sign up to be a training consultant at Appen, and effectively, pictures will come up on the screen and it'll get you to either click on a button to say what it is, or so it helps train the data set. That's exactly what you're doing. So, like you mentioned, Koshi, very labor intensive, and now effectively what's happened is that the next stage of development in terms of we're actually probably able to train these data sets internally, which is what all the big companies have done, and hence all these big companies have pulled away from Appen's business. They've all been able to effectively find ways to develop it and train the data sets themselves through the use of AI. So, right. Things are rapidly advancing in this technology space, and effectively Appen's old business model has been left behind.
Yeah, which I think regularly our panels, when Appen has come up over the last 2 years, have made that point that AI will probably replace what it does. But Daniel, if you're still stuck there and you've ridden Appen all the way down and it's at 29 cents today, what do you do?
Yeah, well, that's the issue, Koshi, isn't it? I mean, unfortunately, they declined to deal with that international company offered to buy them out. If I held the shares, quite simply, look, I probably would have been long gone a long time ago. But at this point, the business, not only is its revenues going down, but it's losing clients. You simply can't be invested in this. There might be a bounce. We know how share markets operate. But the business model is effectively broken. It's not making cash. When will it have to raise again? That's the question. So, no, I don't think there's much of an adage to be in this one. Effectively, we all know how markets operate. Like I said, will it have a bounce? It could even go up 50%. But would I want to be in this? There's just no chance, really.
Okay. David?
Yeah, I think Daniel summed it up very, very well. It's one of those businesses that, I mean, today's announcement was terrible. As you said, 30% of its revenue gone, and the company apparently had no prior warning of it. But even when you look at their result, they'd lost $20 million last year prior to this announcement. So, it's not a profitable business, and one that, as the share price shows, was once a market darling. Back in August 2020, it was over $38. They're now 28 cents. So unfortunately, if you are someone that's holding on to it since $38 or $30 or so, you'd probably hold on to it. But they're probably the only people that I would be in the stock for. The company did come out in their announcement today and try and shed some positive light on the announcement by saying that their November and December result was quite positive, and that they've been selling into new markets, particularly China. So yeah, there may be some silver lining to it, but looking at the announcement today and the share price today, it's certainly very, very difficult to see a silver lining at this point.
So, but if you're in it, you'd hold it at this level.
Look, I think you probably have to if you're a long-suffering shareholder of it. But there's probably not much point selling out now. But as Daniel said, this sort of stock, there could be a bounce at some point in time, but it's not one that I'd be putting any new money into.
No. So take advantage of a bounce. You've got tax loss selling season, a couple of months away.
Yeah,
Maybe
that's right.
On your list.
Yep.
Get advice from your accountant and advisor, of course.